What is the bank rate?
The bank rate is the key interest rate in the UK, and this is set by the Bank of England. Once a month, a panel of 9 sit and vote and decide what that rate should be. Parameters that they take into account include the general performance of the economy. So at this moment in time, as I'm sure our listeners are aware, we're going through an inflationary adjustment, basically where the price of goods this year cost more than they did at the same point last year. The belief of the bank is by making the cost of money more expensive, it will cool the supply of money and then therefore cool the price increases. Such matters also link into wage rises for employers and also the ability of businesses to be able to raise capital for expansion plans.
So how has the bank rate changed over time?
Looking back to 2008-2009, when the world entered the banking crisis, the base rate was between 5 and 5.75%. However, as a result of the banking crisis, the Bank of England decided to reduce the base rate to around about 0.5%. At the same point, they embarked on quantitative easing, where they injected new money into the economy. The base rate remained flat then for a good number of years, and the Bank of England around about 2016-17 decided to increase this. However, in answer to the coronavirus problem, they reduced this to 0.25%. However, in answer to the inflationary pressures that the world has been facing, the Bank of England have deemed it necessary and appropriate to use the base rate to bring inflation under control, taking us from a base rate of 0.25% to 4.25%. It is felt that 4.25% will be the resting point for the base rate, allowing the bank time to see if this is now going to feed into the economy and work as intended. However, the next meeting is due on the 11th of May 2023, at which point the panel will vote again as to whether to hold, decrease or increase the base rate.